For our next session, I'm thrilled to be joined by Sopnendu Mohanty, who is the Chief FinTech Officer at the Monetary Authority of Singapore. It aims to promote economic growth and a world-class innovative financial centre in Singapore. And we're going to talk about how the current landscape for investment in the region presents growth opportunities for investment in FinTech and businesses around the world. So please join me in welcoming to the stage Sopnendu. Great to have you here today. Thank you so much.
Thank you. Thanks for having me.
I'd love to kick off by just asking you about just general trends for investment in FinTech in Singapore. Last year, they hit a 3-year high, and FinTech deal activity also hit a new record. What was behind that?
Well, the market went down by 60–70%. Singapore saw a 20% growth. I think, well, a lot of people ask this question, kind of not a compliment. A lot of crypto came in. Large part of our investment growth came on back of the whole B2B fintechs. The fintechs who are building infrastructure for the banks and corporates to digitize faster. I think there was a structural reason why we, from a policy standpoint, we focused on this kind of fintechs. And during COVID crisis, there was a huge demand from corporates and financial institutions to start digitizing faster. Because we had a natural place for a lot of B2B fintechs, they have suddenly found themselves in a very good position. So a lot of this capital investment came in that space. Even in the crypto space, the one in Singapore which got a lot of capital allocations are the infrastructure players. Behind the scene, the custody, the exchange support systems, the tech stack which supports this crypto industry got a lot of capital. And they're still sustaining that growth despite the crypto shift happening.
And why was there suddenly that shift in investment in infrastructure at that point?
Because Singapore, when 2016, when we started talking about what should Singapore do in the space of fintech. In fact, the little story which I always share, I went around, when I took this job as a Chief FinTech Officer, I went around and I came back quite disappointed, looking like Singapore has no scope for this in the space of fintech. Because people ask me, you're a small market, why do you care for fintech? Very well-banked country. Then the only chance we had in this space was to think differently about fintechs. And the way we thought in 2016, okay, we may not be a large market, but can we be a significant force which can help the incumbent to do transformation faster? While there is a play for B2C fintech, but we over-allocated our focus on the B2B side because we're a small market. We don't have that natural environment for B2C to grow. And during that time, in 2015-16, the biggest growth market for fintechs were large market, India, China, Indonesia. Those are large markets around us. So that natural constraint forced us to think about B2B, which paid a huge dividend. Then we didn't know COVID will come, but it really paid a huge dividend to us.
And that ramp up in investment last year, do you see that continuing this
year? Yes, I looked at the first quarter number. We are up by 20–30% against the previous quarter. I think we should do definitely equal or better than last year. Again, the growth area will be in B2B space. We actually, due to the changing regulatory environment, high interest rate with the banks having a distinct advantage there, the growth of B2B will sustain. The growth of B2C will find strong headwind, and that we don't see much growing in that space.
And what was behind the fact that crypto was one of the top areas of investment last year, given that it was such a destabilizing year for the sector?
Well, a lot of people perceived in their mind that Singapore, due to the experiments we're doing as a regulator in the space of digital asset, it created a lot of expectation from a lot of crypto industry that maybe there's a place they will find some support. But our focus was understanding what we can extract out of this whole shift in thinking. And we continue in that path. The whole CBDCs, the whole tokenized deposit, it continued to be a part of our experimental journey. I think we also realized that large part of existing financial system will also see a architectural shift within their own system. There'll be a lot of questions around the existing intermediaries coming in between. Do we need them? can we find a better way to deal with the settlement processes? So a lot of crypto industry, tech companies who are powering crypto industry, they saw an opportunity that if Singapore and Asian market make a shift on the middleware infrastructure, they have a ready-to-go tech stack to be part of that journey.
That's interesting. And what would you say, you talked about B2B, but what do you think is driving the next wave of financial innovation in Singapore? What are the building blocks for you?
So I think this is an interesting question. Let's spend some time here. I think if you are a fintech company, this is a time to take a pause and rethink about your business model, because progressive regulators, progressive policymakers in many markets are going to put disproportionate focus and capital behind digital public infrastructure. In some sense, I would say fintechs were arbitraging natural inefficiency in the system, whether it's a payment processing or lending services. Given governments are going to put a lot of capital to build digital public goods, whether it is a payment rail or it's the data exchange platforms, whether it is digital consent systems, also open commerce network. India's putting a lot of infrastructure around the e-commerce space, the SME space. I think it's called OCDN, Open Connectivity Data Network. These infrastructures will actually make a lot of fintechs who are trying to plug the existing gap will find that business model getting questioned, or at least the arbitrage opportunity will go away.
Are you talking in Singapore or globally here?
I think this is talking of Singapore in the Asian market particularly. Okay. India, Indonesia, Thailand, Bangkok. I don't know about European market. I am not sure about in the US market. I'm talking the Asian market particularly. There's a shift of putting a world-class digital public infrastructure. And if that goes as planned and they get connected, you will see that existing incumbent will be in a distinct advantageous position because they're going to ride on public rails to allow money to move efficiently, to have businesses to have better connectivity. I think, and this does changes a lot of the innovation path we see today. I think to me that those are the building blocks, the future enabler. And recently India and Singapore, Thailand, Malaysia are all getting connected within the domestic payment rails. A huge shift when domestic payments get connected. A huge shift when the domestic national identity system get connected. A huge shift.
When would that be?
So this is all happening. Singapore connected with India a month back. India's UPI got connected to Singapore's Pay Now. Singapore is already connected to PromptPay in Thailand. We are getting connected to Malaysia end of the year. So, and BIS particularly also has focused on this called Project Nexus. They're putting a plan for designing a specs for banks, for domestic payment rails to get connected. If this is the shift, this is a significant shift happening for financial sector. Yeah. I think fintechs will find tough if this happens rapidly, and they've got to think hard about where they should play the next.
Here in the UK, obviously, we're doing quite well in the fintech sector. We're quite advanced, we're quite developed. Are there any learnings that we can get here in the UK from you guys in Singapore and vice versa?
I'm sure Europe and UK will also, at least the public side, should also think about public infrastructure upgrade. Europe, and look, UK has got a fantastic faster payment system. I'm sure some point time they would like to connect that to Asian market. There'll be a lot of public goods will get connected. If that happens, I'm sure UK fintech ecosystem also have to think very hard about how they think about the future business model. In the Asian market, from a public regulatory standpoint, we are double downing on the whole consumer protection. This has become a big part after the crypto fiasco. I think the consumer protection is becoming a big part of the thinking. There's a significant focus on ensuring governance, a key part of fintech's own structure. This is something from a lesson learned the UK can pick up. Governance, consumer protection, focus on AML, KYC, getting well regulated. But I think these are the things which I think will find common ground with UK.
And in Singapore, how are you positioning yourself to capitalize on this next wave of financial innovation that's coming?
Because we have a natural advantage of being part of a global financial ecosystem, our natural, I'll say, natural shift is to public good, public connectivity. We have positioned ourselves being open, interoperable, and open to a coordinated global response when it comes to financial systems. Even in the argument I'm making in favor of this whole digital currency, today I was in Washington, D.C. last week. We are talking about unified public ledger, and Singapore wants to be plugged into that. We are talking about a coordinated response to digital currency, whether it is retail CBDC, wholesale CBDC, or tokenized deposit. These are big macro, strategic, forward-looking thinking when it comes to innovation, when it comes to financial sector. This is all part of a coordinated global thinking. So Singapore is already plugged into that discussion so that we don't want to be an outlier in that space. And we believe that's how the future should look like. If you deconstruct the financial sector, the last mile challenge has been the settlement challenge, the reconciliation challenge. The front end has been largely fixed. The public good is work in progress. The last mile which financial sector have not figured out is to how to close the settlement and reconciliation process. That's perhaps bulk of the inefficiency, bad consumer experience, and a bad product design. If that gets settled by a wholesale currency or retail CBDC, largely we are having a great forward-looking financial sector.
And to what extent in the region do you collaborate with other countries?
We are quite mad when it comes to collaboration.
Mad?
Yeah, because we have collaborated with Africa, we are now collaborating with Latin America. We believe that the financial sector has no boundaries. We have no limitation in our thinking where to go and collaborate. As we speak, we are collaborating with Ghana on small business connectivity. Think of Singapore is one side, Ghana is in the west of Africa. We are talking about how to connect our businesses together. Why? The global food supply chain will be originate from Africa. That's the future global food supply chain. So we want to be connected in that whole framework. We want to be connected to Latin America. That's a big part of this new shift in the global supply chain. Wherever the business is going to move, wherever there's a shift in the supply chain, Singapore will go and collaborate.
But it feels natural that there should be no boundaries when it comes to fintech.
Yes, absolutely.
That seems right.
Yes, and I think particularly this whole notion that there's a competition between different cities and countries is absolutely a misplaced competition. Because you ask any fintech in this room, they don't want competition between the centers. They want to go and do business in every market. Best for the fintechs is to get the regulators to collaborate.
Absolutely. And just one final point. Any tips on what could the UK fintech sector be doing better from your experience?
I think UK fintech is doing exceedingly well. We try to learn from UK fintech day and night. We try to copy seamlessly what you're doing well. So we have no problem with that.
All right. Very good. Well, thank you very much.
Thanks for having me.
For your time. Thank you.